Doesn't it kind of feel like we just go from crisis to crisis to crisis to crisis, keeping everybody off balance? And the dollar has really enjoyed massive benefits by being the world reserve currency because it created an artificial market for dollars. But no currency has ever withstood the test of time in as far as the world, well, actually any fiat currency, any government-based currency. And this time is not any different. I think what's interesting is that things always go really slow until they go fast. And so the time to be prepared is well before that. But it was already in 2002 where the Federal Reserve started buying back US government treasury debt. So that was already a period where we were not attracting enough foreign investors of our debt. We had to have the Federal Reserve step in. But did anybody talk about that? Heck no, because they don't want you to know. And so it makes me nervous when there's any topic that frankly they're not really talking about. But for people in the US, what that means is all of those excess dollars, especially with Saudi Arabia saying, hey, we'll accept any currencies for our oil.
Lynette Zang points out that we often move from one crisis to another, which can keep everyone off balance. She mentions how the US dollar benefits from being the world's reserve currency, but history shows that no currency lasts forever. She's concerned that the Federal Reserve's actions in 2002, like buying US government debt, aren't widely discussed, hinting at potential risks. Additionally, she highlights the significance of Saudi Arabia's openness to accepting different currencies for oil, signaling potential changes in global trade dynamics. Overall, Zang emphasizes the importance of staying informed and prepared for economic changes. Lynette Zang sheds light on the petrodollar's role in maintaining the US dollar's reserve currency status, emphasizing that countries traditionally had to use dollars to purchase oil. However, as this dynamic shifts, with countries exploring alternatives, Zang foresees consequences for the U.S. economy when these dollars return home. She challenges the narrative of easing inflation, attributing the temporary drop to lower oil prices. Zang predicts a future surge in inflation, especially considering the global impact of central bank tightening, which typically takes 12 to 18 months to materialize. Expressing concern, she anticipates a significant shift in the economic landscape, affecting Wall Street and exacerbating the ongoing retirement crisis. Zang challenges the assumption that governments and central bankers desire a status quo. She suggests that the sustained zero interest rates post-2008 financial crisis might be a deliberate strategy to nudge the system toward a crisis. This, she argues, could pave the way for the implementation of a full surveillance central bank digital currency, a notion she contends aligns with their broader agenda. Notably, Zang highlights the admitted lack of understanding among central bankers regarding inflation, adding a layer of uncertainty to the current economic landscape. Her analysis prompts consideration of potential hidden motives and strategies at play, emphasizing the need for individuals to be vigilant and proactive in navigating these complex economic shifts. Analysis delves into the statements made by prominent figures such as Christine Lagarde and Jerome Powell, highlighting their acknowledgement of the economic challenges ahead. She expresses concern over the potential consequences of the strategies pursued by central bankers and governments, characterizing them as actions that may precipitate the next collapse. Zang questions the narrative that massive money creation hasn't led to inflation, arguing instead that it has fueled bubbles in real estate, stocks, and bonds. She underscores the fundamental flaw in the current monetary system, which relies heavily on the perpetual creation of money and debt. Her discussion extends to liquidity issues, particularly surrounding treasury bonds since 2015, and the unprecedented global yield curve inversion. Zang emphasizes the significance of these developments, suggesting that they indicate a fundamental shift in the global economic landscape, potentially leading to a global depression. She articulates her view that the current fiat money experiment, based on debt, is reaching its conclusion. Zang predicts that hyperinflation will be the inevitable outcome as advanced economies grapple with unsustainable levels of debt. She advocates for the ownership of physical gold and silver as a hedge against currency devaluation, citing recent examples like the revaluation of the Lebanese pound as evidence of government's manipulation of gold prices to conceal currency weakness. In her closing remarks, Zang cautions against relying solely on nominal prices reflected by Wall Street, asserting that they do not accurately represent the true value of assets. Instead, she warns of the influence wielded by those in power to maintain control, urging individuals to be discerning and informed investors in the face of evolving economic conditions. Lynette Zang's argument extends to the realm of precious metals, particularly gold and silver, as she emphasizes their role as a hedge against economic instability and counterparty risk. She points to significant indicators of smart money accumulating precious metals, citing the drawdown on the COMEX and LBMA as evidence of large institutional investors positioning themselves for potential market turbulence. Additionally, Zang highlights the increased gold purchases by central banks, surpassing levels seen during the transition to new monetary systems in the past. Zang challenges the common perception of fiat money products as safe investments, arguing that they carry inherent counterparty risk due to their reliance on credit and debt. In contrast, physical gold and silver held in one's possession are deemed as assets that run no counterparty risk, providing a tangible store of value in times of uncertainty. By advocating for the ownership of physical gold and silver, Zang encourages individuals to diversify their portfolios and safeguard their wealth against the inherent risks associated with fiat currencies and financial assets. She underscores the importance of understanding historical monetary transitions and their implications for wealth preservation, urging individuals to take proactive steps to protect their financial well-being in an increasingly uncertain economic landscape.